MACD a little bit negative. Stochastic still holding at 86%. And the 120-minute chart, let me go to this here. The 120-minute chart, I drew it in and I did all the analysis exactly to the penny. I said that the Dow needs to get to, the 120-minute needs to get to leg D. And we've got to watch the volatility index, because if it gets into the 14s, got to be a little bit careful here. And that there was a leg E up in the S&P, leg F in the Dow. So there's a lot of evidence to say that I could probably be right on the DXD trade. Well, lo and behold, what did I do? In my trader's corner, after all that work over the weekend and everything, I thought because I needed that leg D up in the Dow Diamonds and the E minis on the S&P futures, I said, instead of making the stop on at 38.48 was the entry price on the DXD, closed at 37.84. Instead of making it 80 cents, let's lower it a little bit to 37.60. And if it touches, my thinking was that if there was a decent rally and it touched 37.84 at any time, a decent rally because the market started to pull back at that point, the DXD actually went to something like 30. I was thinking 38.98, which is not much higher than the close on Friday. I would then raise the stop back to what we had for the last couple of days, 37.80. Well, I miswrote it. I typed in 37.98, which of course it did, and then it pulled back. And I believe I wasn't here. One of the problems was normally I'm here to make any correction because I'm here doing the opening or whatever it is. And but I had my printer, one of my printers, but my main printer was out. I had a problem with the paper, with the rollers. So I thought I'd zip down to my man to try and get it repaired. And lo and behold, I didn't get the messages from subscribers to say, well, did you really? They know what I usually mean, but I need to do it so everyone knows what I mean. So what happens is that the DXD today opens at 37.75, so that was good. Then it pops up to 38.05, which meets the criteria. And then, unfortunately, what does it do? It slips down to, we weren't taken out. It slips down to 37.83, 37.87. Oh, so the April Fool's Day is still... It's no April Fool's right now. I'm sorry I have to do that because I just wasn't here and I actually couldn't make any changes because I was out. So let me do this again. Market opens at 4:01. Let me just double check. I want to get this wrong. Oops, it opens there. So it pops up to 38. Let me get this right. It opens at 37.98, pops to $38. $38. Yeah, went over the 37.98 by 2 pennies, and then it pulled back to 37.75. So, yep, we were stopped out. That's a pity. Now, I say it's a pity, but I'm not crying, and I'll tell you why. There is still residual strength, and that's the reason why I want you to have. My theory always is that if you change your stops, and that wasn't your plan, there's a really good chance that you will get stopped out of the lower. If it's a buy stop on the upside, you'll be stopped out of the higher stop. And if you keep changing it, you're going to change it to the point where if you had to step back and be absolutely objective, you will go in and look at that trade and say, wow, that's a great price that I should be buying or selling. So that the stop that you make is very often the stop that you should be entering the trade. So it's a completely wrong deal. This was pre-planned. I thought it out. That was part of my strategy. I almost had the same type of strategy on Friday, and I needed that extra leg up. It was just unfortunate that I should have given it a time span. Often I say, okay, don't, like I did for certain trades. What I do is I say, for the first, it's unfortunate for those who are at work or whatever and they can't follow it, but I just have to do what I have to do. And sometimes I'll say for the first 10 minutes or 15 minutes and then put the stop back on because I need that little opening weakness or strength to then settle and the real day begins. All right, so that's the big deal. I mean, that April Fool, that was me. And that's unfortunate. So we were stopped out of this trade for, it's not a big, I mean, 1.5%, I think, 2% loss. It might be less. But it was unfortunate, and I'll explain why. Even though there's strength and the stochastic still at 86%, this is a potential leg F in the Dow. And F is where you've got to be real careful. Now, I could have recycled. This could be a B, a new B. But I'm just going to treat it, that's a done deal. Can always get back in. It's not if there's a trend change now, believe me, you can get in at any point. So that's the unfortunate part. So, it's part of trading. You take your wins and you take your losses. Now let's finish up. We've got the SPX.X, and that one, let me move the 120-minute chart away. And that one has made a potential peak E if there's a lower high bar tomorrow, because it made a higher high today. Just as the Dow is making a leg F. And both of these could actually recycle, because although the MACD, I put a lot of weight on the MACD, the fast-moving average, although it's negative, the stochastic shorter term is saying there's still some inside strength. So, watch this closely. The 9-period moving average, the S&P is at 1560.66, down 853. Now that's minus 54.54%. The Dow's only 0.23%. So there's a big discrepancy. I'm putting the weight here on the 500 stocks rather than the 30. So leg D up in the weekly. Now this is the thing. This is the reason why I wanted to be a little bit more on the short side than anything on the long side. And the high of Friday was 1570.28 in the S&P, and today it went to 1570.57. So on a weekly basis, we've extended leg D. That doesn't say where we're going to close for the week or next week. I have to still wait a full. Now I have to wait until Friday a week before I get a peak D. If there's no high above 1570.57 from this moment on into a week from Friday. Leg C up, and that means that it's still leg C up in the. That's why I wanted to see a new high today in the charts, in the daily charts, because it pushed the weeklies and the monthlies into that extra leg up, into the extension of that leg up. Now, this is going to be interesting to the Qs, 1, 2, 3. The QQQ series made a leg D. You see, we've got synchronicity here. Not only did it make leg D, but you've got a failing MACD, stochastics under 80% at 79%, and the weekly chart is making a G/C, but with a 93% in the weekly, so it means that the dailies going to have to do a lot of work to really damage the weekly chart. 88.16 is the 9-period exponential moving average in the weekly chart. That's a little for folks looking at my work for the first time. Left side's the daily chart, same stock that we're looking at, in this case, the QQQ. This is the weekly, and that's the monthly. Monthly hasn't made leg D, and it needs to make leg D above 70.58. That's a little bit of a way to go. And most importantly, just want to have a look here. Yeah, most important about this whole thing is that the IWM, which for a long time was leading, it was the first one to make all-time highs out of all the indices. Now it is lagging quite badly. It's at 92.86. The weekly chart has made a peak C, made it a few weeks ago, in fact, and the monthly is a peak C. And I've got a C/G in the 120-minute, in the daily chart. So this is, watch out, if you've got the IWM, which was leading, now weakening, it's kind of a bit of a heads up to say, okay, your former leader, which is the small cap stocks, is now lagging. So we've got gold. Gold is up $2 at $15.97. Silver's down 45 down 45 cents. And high grade copper, copper is at 3.98. Well, we'll look at that in a moment, but also bonds are up a half a point, and that's going to be very interesting. I'll talk about that when we get back. Basil Chapman, 877-927-6348. Let's take your calls.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
So we're back. Let me just finish typing this in. Contract. Let me show you something. Let me get the right color. That's the color, sort of like that. Not quite. There you are. Okay. Now, this is going to be very interesting. Why? Why? Because... color, just want to get this right so that you can see it clearly. There you are. Okay. This chart I'm showing right now, that is the bond continuous contract in this kind of bluey-green color. The yellow is the Dow, and this red is the 30-year T-bond yield. See how the T-bond yield has rallied peak A to peak B? This is a monthly chart. Well, it's peak B if there's no new high bar this month. You see how that's the yield. You see how the bonds themselves have come down, trough A, trough B over there. And you see that the Dow has gone to a new high, all-time high, in fact. Well, sometimes relationships stay. Look, there was a period here where the Dow was coming down, bond yields were going up, very sharply, in fact, and there's been a period where they've gone in unison. And that same relationship can be found in most of the commodities related to the Dow. Most importantly, what I'm looking at here is that in the TLT, if the TLT takes out, it's at 118.27, the Leah Treasury Bond Trust, 20-year trust fund. If it goes above 118.77, it starts leg D up in the daily chart. But it's not the daily chart which is making this double cup formation. It is the weekly chart that says you've got to break that circle. You've got to break above not just 118.77, but 119.67 to really show that you've got an intermediate term, let me call it more than a short term, closer to an intermediate term rally in the bonds. And if you find that happens, there's a good chance that the stocks will start to pull back. So I want to just cover that just to get a sense of what we're looking at. I also want to go to our first caller. We've got Mike in Pennington, New Jersey. Hi, Mike. How are you?
Good, Basil. How are you doing today?
Very well, thank you. You'd like to look at?
Chipotle Grill.
Oh. This is another April Fool's Day for me. Chipotle Mexican Grill Inc. is trading, CMG is the symbol, trading at 321, down $4.78. Do you have a position?
I bought a June 275 put.
Okay, very good.
They're earnings are April 19th.
Wait, you say it's in April or June?
I have a June put, but the earnings are April 19th.
Oh, April 19th. Okay, very good. Now, this is what I'm looking at, folks. Now, we were actually short. When I said before earlier on that we were short another stock, took a small percentage loss, that was CMG. And one of the reasons was, if I'm going to show the chart right now. First of all, I'm going to tell you, almost everything about this says that you're probably going to do very well. Now, if it does go down to the, you got the 275?
Yeah.
Let's see, the 275. So you got it last week, so you are kind of close to your entry point, right? You may be down just a fraction?
I got it this morning, so I'm
you got it this morning. Excellent. Okay, very good. Now, what we did is we went short of 318.20 and 320.20 on right there on the 27th. That's for my subscribers. Why? Because it looked like it was flattening and it was about to make an M-shaped pattern. But I was a little cautious at the end of the day, only because the on-balance volume turned up with the stochastic turning up, but not yet crossing positive, and the MACD was starting to flatten out for the first time. The next day looked closed at the high, and suddenly I'm looking at the stochastic, so I kept the stop, which is a very tight stop. The stop was at 324, I believe it was 324.30. What happened was it was a very strong session on Friday. It turned the stochastic up sharply, and the MACD looked not great, but it looked better. So I decided this morning to leave everything alone, even though it looked like there could still be some more upside activity. There was, in fact, this morning, and you got it almost at the high of the day, which was 328.47. And this is the candle that I was hoping to see on Friday, not the one that we had. Now what I'm saying is that gives me a better sense. The day hasn't closed yet, but let's just say it closes under 321, preferably 320. I'll talk about that as soon as we get back, because I want to give you the perspective that gives you a time price match to the low that you would like it to go to. So I'll be right back with Mike in Pennington, New Jersey, straight after this break.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. Target ignitions now. Let me quickly say, because I was going to say at the opening monologue, because the MACD is turning down in the Dow, because I have leg F/B, one could go long, but I wasn't prepared to go along any new positions right at this particular point. I want to see how the day closes, because if the mantra phrase continues and we pump up by the end of the day, and the Dow, the S&P, in fact, right now it's coming back. It's only down 7, and the Dow's down only 20. If the Dow closes up 20 and the S&P closes down only 2 or 3, I'm looking at this and saying there is residual buying. So that means if CMG is down today at 464 right now, and it's not coming back, barely coming back with the market, it's saying something else is going on. It could have been a recommendation on Friday that pumped it up, on Thursday that pumped it up. So this is what I'm looking at. I'm going to go with the downside first. The downside says that very short term, it needs to take out 319 to 318. It can't just test it and bounce. It's got to take it out and close underneath. If it does that, then all of a sudden I'm looking at the weekly chart. The weekly chart says, peak E for 3 weeks in an up channel, but in a very quick price movement, A to B to C to D to E, quite quick, I should say. The MACD is still very good. The stochastic is the clue here, because the stochastic's at 80%. On balance volume is also the clue, and the relative strength. And they're saying if there is a pullback by Friday afternoon, because this is Monday, the very opening 2 hours, if by Friday it's closed underneath 316, around about 316.5 is the 9-period exponential moving average. If it closes under that, that'll be the first time it's closed under the 9-period moving average in the weekly chart since it broke out the week of the 14th of December. At that point, I would say, okay, I don't know time yet in the weekly, because I still have to get confirmation of weakness in the technicals. But on the weekly, what I would say is, then I'm looking at the 9-period moving average for the first time beginning to become a resistance, and that's what you want to see. And then the up channel trend line that's formed says, not this week, let's go to next week. Next week, 303 to 301 would be the target support if it broke down. And that is a rising support. The following week would be a little higher at 305. So that's what I'd be looking at. So now let me say that, and I'm with you here. I think from everything I'm looking at, the day is young, anything can happen, but I can tell you this, that the action of Chipotle today says to me that the rally was some kind of a recommendation or something. It didn't have the gusto that it needed to be able to get the technicals to turn positive. It had the price. So I'm saying to you that I'm wrong if for any reason Chipotle takes out 328.47, and especially if it closes above 328.7 to 330. Now, you've got a put, so the put makes it a little difficult in that by the time you see all this, you've already lost any of the premium that you might have right now.
Right.
So the only way I would say to you in terms of money management is that if there's a rally in Chipotle towards the 320, it's at 321 right now, but by Tuesday afternoon, if it's trying to rally and it gets to 323.10 to 324.50, I'd start looking at that put. I don't know how many you've got, but I'd probably say, you know what, I'd lighten up a little bit. You could always get back in, but right now it looks like you got in at a perfect price. So congratulations on that. And you want to see Chipotle. I don't care where the Dow and the S&P go today. You want to see Chipotle close underneath 321, but especially 320 will be great.
21. Okay, thank you. I got it.
Okay, now, and keep me updated. I'm watching this real closely as well, but just to remind me, in case for some reason I'm so overwhelmed with other stocks that I forget about it, remind me, as soon as it dips underneath 317, just drop me a line or call me, and we want to look at it together, okay?
Okay, sounds good. I'll keep an eye on it.
Thank you very much. Okay. That's Mike in Pennington. Great entry price on a put position on Chipotle Mexican Grill, close to today's highs. Now, I wanted to do this. I'm going to skip for a moment all the charts that I was going to look at. You remember on, was it Wednesday? I think it was Wednesday. I said, Tuesday or Wednesday. Yeah, Tuesday or Wednesday. I said, I looked at Lennar, and I thought it had given me a top, but I didn't want to short it because it's in the strongest group. But it's a group that I'm very nervous and a bit cautious about, which is why I have not got any long positions in any of the home builders right now. And I had an email just a moment ago. Sandy wanted to know about HOV. So great, that fits right into what I want to look at. Now look at this. Lennar, one of the very best of the home builders. To be as conservative as possible, I've called this, it's one of the most extensive long-term 3925 long-term monthly consecutive higher high bars that is I've seen in a long time. $12.14 was the low in October of 2011. And in fact, I believe I was at the Boston Investors Group, gave a talk there, and I said, these are the stocks you've got to be looking at. So Lennar had a high of 17.41, and that broke above the 9-period moving average. Well, it continued October, November, December, then January of 2012, February, March, April, May, June, July, August, September, October, November, December. And then in January of 2013, it made its peak D. It pulled back, and now it's leg E. Now, there's a chance some of the others I've had to call B because they made lower lows, and the monthly chart is absolutely, it looks like a single move up. But I'm going to be a little conservative. I'm going to call this peak E. It could recycle, that's fine, but right now it's peak E in the monthly chart. But wait a minute. Lennar, LEN is a symbol. It's down 66 cents now at 40.82. It made a pattern that I called decidedly negative on last week, because I said that it hasn't broken to a new recovery high. It hasn't broken the trend line that I'd drawn in that falling axe formation. And it was, in fact, pulling back. And today, it's pulled back again. So this is something I'm going to watch, because the MACD in the weekly chart, look, there it is. Fast-moving average is way below the slow-moving average. And the stochastic has turned down into the 73% range, and the on-balance volume has pulled back. So I'm very cautious here. I want to look at the home builders to enter long, but I think they need a rest. And there's peak F in the daily chart with the stochastic and MACD very negative. So it's holding the in this case, I believe it's the 100. Let me just double check. The 50-period exponential moving average right there. But I have a target for it. If it closes under 40.37, the low of the 13th of March, somewhere inside here where that very ugly candle began on the 20th of February at 40.59, oops, I'm sorry, at 39.60, I think that the 40 to 39.60 area is really going to be important in terms of finding support for Lennar. Let's now look at Hovnanian. Hovnanian, a great laggard, has made a leg B up, a peak B in the monthly chart, having had an all-time high. I didn't mention what the all-time high in Lennar was. Hovnanian was at 73.40 back in July of 2005, and Lennar was, I think, 100 and... Lennar was at 63.89, but I think 68.86. But I believe they split soon after they made the top, because I remember a week or two before I mentioned on air, I said, I've just seen Hovnanian brothers, one of the brothers, and I've just seen Toll, one of the Toll brothers, talking about this stock and talking about the 2 to 3 year inventory. Believe me, folks, in the real estate business, in the airline business, inventory and orders are absolutely critical. I've seen, what is Boeing doing down? It's down 37 cents. I've seen airline orders canceled, just like that. People, what they do is they prepare to forgive up their down payment. Well, I don't know if that's actually the way it works, but they do give up something, and they say, "I'm sorry, we can't take these orders." I've seen it over and over in the airline business. I don't know if it's going to happen now, but I've seen it before, and we've certainly seen it in the real estate business. So you've got to be a little bit careful in terms of listening to what they say. They're sometimes talking their book, but sometimes they're explaining their book. So Hovnanian, I want to wait to see. It is a laggard in the area. So I'm thinking that in this particular move, that the pullback that's coming in the real estate area, that's the stocks I'm talking about, the home builders, I believe I want to do some buying, because the mantra doesn't stop just on a dime. It's peak D in the daily, peak E in the weekly, peak B in the monthly, and I have to say that there's an H pattern that's forming, and Hovnanian trading at 563 down 14 cents. I'm watching to see our 540 to 516. That's the area I'm going to be looking at. Do I want to buy? Do I want to nibble? Do I just ignore it? Or do you want to, in this phase, skip completely the secondary and tertiary stocks and stay with the Toll Brothers and Lennar, which is Toll and Lennar are just, they're the best. I don't know if they're the very best because I don't know the whole sector intimately, but I believe that Lennar and Toll Brothers, they're the meat of the industry. So that's what I want to talk about. I also want to talk about the fact that you're hearing so many analysts come on, either real estate agents or whatever, talking about real estate right now. I think we're going to make a serious top in the real estate area, and that's going to be later this year or early next year. Maybe by next spring. I'm not sure, because these things do last longer than you ever expect. And I continue to say, and I've been saying it all the time, that if you're looking at a place to live in and you're going to live in it for a long time, yes, price is obviously important. Interest rates are really low. That's key. That's really important. If you're going to live in it, do you really care if it goes down 20, 30%, if you're going to sell it in 30 years' time? Who knows what it'll be if you can afford it? It's two separate things. If you're looking at it as a business, as a flip, or you're looking at it as a rental income, you've got to do your homework. You do your homework, you're getting cash flow, that's what you want. That's what you want. It doesn't matter about the market. It matters on your bookkeeping. So, got that out the way. Z for Zillow. Let's just look at Z. Question, not a question, but a statement. Yeah, Zillow's made a peak D top in the daily, peak C in the weekly, so still has strength in the weekly chart, and it's a D in the, whoa, this is going to be interesting. I better check that weekly. It's a D in the monthly. So Zillow, Doji, beautiful Doji candle at 57.82, trading down at 52.70 right now. I will be back at 877-927-6648 if ever there was a day to make a call to find out what's happening in the market and what I think of in the ChapmanWave, based on the ChapmanWave. This is the day, the 1st of April. I'll be right back straight off these messages.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman. Dow's down 22. S&P's down 729. Now, it's interesting that the Dow, I should have put that up so I would have seen exactly which Dow stocks, well, I'll do it now, which Dow stocks are acting well. Now, this is also going to be a very important period for me going into, I would say, Wednesday morning, Tuesday afternoon, Wednesday morning. A couple of reasons here. And the most important reason being that because we've already made new recovery highs and all-time highs in some aspects in the Dow, the S&P, the Qs, not the IWM, for me that's kind of important. Transports are down pretty sharply right now. You've got some real divergences going on. Bonds are up a little bit. They're up 43 cents in the TLT. Gold is up 23 cents. Gold is just not acting all that well. So let me just do a couple of things here. I had a couple of questions. There's a question now about General Electric. Now, I've got, we in my opening call, we had General Electric as a buy, and we took our profits on Tuesday, last week sometime. I didn't want to hang around. I mean, there was a profit there, and it wasn't doing what I wanted it to do, and while we still had a pretty decent profit, it's just I want to get out. And here's the reasoning. General Electric has very often been the tip-off to a market trend change. Now, it's done it for about a year and a half. I don't know if it's going to continue to do that. And it's really just the turning point. It doesn't give you much more than to say that there's a turning point. So GM has held the 9-period exponential moving average in the weekly chart. My suspicion is later in the year, GE's going to kick in and become a darling of some of the fund managers. But as just a guess, so let me put it this way. The question about GE is, I see very little upside now. And this is just an absolute surprise because they're acting a little bit like the financials. I spent a little time on the financials on Thursday. I'll do it again now. Financials are just taking a breather, a well-deserved breather. And they've had a fabulous percentage. XLF from the 13 area to 18, $5. Hey, we're in the 30%, 33% or more area. That's a pretty good gain. You just need a bit of a break. And that's what I think we're going to be looking at. Now, the day is young. So, and I still say that I still see residual strength, which is why, I'm kind of upset that we were taking out of the DXD. I would have liked it. I planned it. I did everything around it. It was just a dumb error on my part. I hate that for it to cost subscribers a percentage. But at the same time, I really do think that if I'm getting the signal and it's confirmed tomorrow, you'll have time to go short. You'll have time to do all this stuff. But if there is residual strength, enough that by the end of the day, somehow or other, the money is pushed back in, I'm just saying, wow, then I've got to look at something in a little bit different light, and I'll be watching bonds. I'll be watching the VIX, which is now up $1.06 at 13.76. If the VIX starts to get into the 14s, it's the start of a move that could drag us down lower. And that's what I'll be looking at. So, yep, I'm upset that we aren't in the short position of the Dow. It was just a dumb mistake. We should still be in. But a stop is a stop. And if I've got it in there, you've got to be strict. That's the way it is. Now, let's go to Kevin in Sacramento, California. Hi, Kevin. How are you?
Good, Basil. How are you doing? Thanks for taking my call.
My pleasure.
See, looking at Anadarko, symbol APC.
APC. Now, let's see if I'm notated. I used to have these all notated, all the oil service, that whole oil sector. Let me just do this real quickly then. APC, which is Anadarko Petroleum, made a major high back at 81.36 in May of 2008, plunged to the 200-period exponential moving average. Of course, it didn't know it was going to the 200-period moving average. That just happens to be the line right there. So let me do this real quickly because we're going to run out of time. So it's ABCD. Did I hear some starter music? Okay. Do you have a position?
No.
Okay.
No,
and the question is, has it made a short?
Because it was looking kind of strong.
But just say it again?
I was looking at maybe selling some puts on it.
Selling some puts on it. No, I would not do that. I've been looking at the put side, buying put. Hey, I would do nothing today. Call me tomorrow and we'll plan this together, but I think it's coming down. Okay?